Hey guys, Zoe here from OneGlassTrader.com, and I'm really excited to be sharing with you the latest version of the OGT Price Action Indicator. Before I go into the latest version and the latest feature that I've built into this indicator, I just want to say how blown away I am by the number of people that have reached out to me thanking me for this indicator. It's nearly up to 20,000 downloads across wherever it is inside the World Wide Web. You even Google OGT Price Action Indicator, it's on forums, it's everywhere. I'm really happy with the way that this indicator has come on. I'm really glad that people are starting to see value and making their trading easier with the alerts that this indicator is showing. And like I've always said, this indicator is not a one-stop shop or a system that you can trade and that's all you want to do, but it does give you some really good signals, and with some confluence factors and some money management techniques thrown in there, you can really create a really solid trading system. So in version 1.3, this is all about price action with the trend. So we're trying to create high probability setups here that are more than likely move price in the favor which you're trying to trade. And what I've got on my screen now is the version 1.3 up, and I've got some moving averages on there, and they're just really for context to explain what this version actually does. Now, before I go into the version, I want to give you, a bit of background of what exactly I've added onto into this version, and what this version does. This version looks at a trader called Daryl Guppy, who created the GMMA indicator, and what I'm sharing with you now is a page from his book Trend Trading by Daryl Guppy. Fantastic read for anyone who's into trend trading or wants to look at getting involved in trend trading or continuation trades with the trend. I strongly recommend that you get this book. And the reason why I've got this page up, this page really talks about his GMMA indicator, and it works on the premise of, I think it is 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6. So it works on the basis of 12 moving averages, and the 12 moving averages are based on two sets of groups. So the short-term traders group and the long-term investors group. And what version 1.3 does, it takes into account the long-term investors group and what exactly they are doing inside the market. And so what does that actually mean? So at very high level, the short-term trading group is classified by Daryl Guppy as 6 exponential moving averages: 3, 5, 8, 10, 12, and 15. And he goes into about the way they move and the way they cross over each other and how they dip into the long-term investors EMAs, which are down here, which I'll go on to in a second. It goes into all of that in his book. For me, what I wanted to do was not really get involved in the short-term kind of group, because again, these moving averages move pretty quickly, so they'll cross each other very so often. What I focused on when building version 1.3 was really looking at sorry, the longer term group, which is the 30, 35, 40, 45, 50 and 60 day exponential moving averages. So that's the bit that I'm focusing on, and this is what I have on my chart over here, and these are what these lines are here. So that's just really to set context of it. And effectively what he's saying is when when price is above the exponential moving averages and they are all in alignment, i.e. the 30th is the closest to price and the 60 is the furthest away from price, they are inside an upward trend, and vice versa. If price is below the EMAs and the order is in chronological order going from 30 all the way up to 60, therefore they are in a short a short trend. And what I wanted to do was only show signals that are in line with that trend. So if I show you the settings and exactly what I've added on here in version 1.3 is this enable filter over here, true and false. So what true will do, if you select this as true, it will only show pin bars, engulfing and marubozu with the direction of the trend. So if we're in a downtrend, it will only show down or sell signal pin bars, engulfing and marubozu, and if we're in an uptrend and you've selected this, it will only show long pin bar, engulfing, marubozu signals. For Doji and inside bars, they will show those patterns based on your criterias at any point because they are indecision kind of patterns, and therefore it doesn't really tell you whether it's going to go long or it's going to go short. So they work all the time. And pin bars, engulfing and marubozu only works when you've selected it as true for sell signals with the downtrend, up signals with an uptrend. So what it's trying to do is trying to give you price action signals in going with the quote-unquote long-term investors, and this works on any time frame, whether it's 5 minute, 30 minute, an hour, daily, weekly, whatever. Doesn't really make any difference. So that's what this filter is telling you, and all it is just this. If you set it as false, it'll be exactly the same as version 1.2. If you set it as true, it unleashes, in my view, well, gives you less signals because obviously it only goes with the trend, but in my view they give you better quality signals. So you could do this with version 1.2, but this, again, cuts down your chart time, by 30-40% because you only will get signals, and again, it's got all the other settings on here in terms of your alerts and stuff like that. You'll only get alerts that that are pin bars that are going with the trend. So basically pullbacks within the existing trend. So for those of you who watched Pin Bar Elite, that was where I was tried to get to, but after I read some stuff from Daryl Guppy, I thought, what's the point creating a pin bar indicator separately to trade with the trend? Why don't I just add it into version 1.3? And as always, this is free. Link below wherever you're watching this video. Go download this, 100% free. And again, I really want your feedback on this. So what I've done is I've set this to true, and I've only set it for pin bars and engulfing because they're my two favorite, which is why I started with those two patterns. And again, I've put really, really loose settings in there. So the previous 4 is 0, doesn't really have a look back period, which technically is probably a bit more to do with reversal trading. And for engulfing, again, I've only checks the last bar of how big the previous bars are. And if all these settings are new to you and you're just stumbling across this video, I'll have a playlist in the description so you can go back and check version 1.0, 1.1 and 1.2, which goes into all of these settings and different patterns in more detail. And this video is purely telling you what's happening with version 1.3. Apologies, I've got a bit of a cold here. So again, I've just picked this chart for demonstration purposes, and we can look at other charts as well if we get a bit of time. So as okay, let's take it over here. From like this section here. So this section here is where you see these really getting a really thick line. That's where all the kind of moving averages are all kind of together and stuff. And what you really want them to do is start to fan out over here. So one thing Daryl Guppy says is that the gap between the lines, the bigger the gap, the stronger the trend. And the further away price is from the actual lines, again, stronger the trend. So you can say this bit here where they're really far apart, you can see very, very deepward downtrend over here. So if I just go, let's just say, I don't really know the exact bit, but let's just say about here is where all of these moving averages a line straight from 30 all the way up to 60, and in chronological order, you get your first sell signal over here. But if I just look at this whole trend here, which finishes about here. So if I just draw another line, I'll say it probably finishes about, they probably cross over about there. So here you see your massive downtrend. Just look here how many signals that you actually get. 1, 2, 3, 4, 5, 6, 7, 8. You get 8 down signals, a lot of them pin bars. And again, I've picked really loose settings here. You can pick, greater than 4 bars. Look back period to the left slightly longer, so price hasn't been there for a while. And again, you've got to remember the further up we are on price, the bigger the pullback and the better price you're getting when price is actually inside the actual moving averages. And one thing is what Guppy says is that when price goes into the moving averages, but the moving averages don't buckle or don't move, as you can see, a price goes in here, but they still keep their chronological order here, therefore indicating that the trend is still relatively strong. So I reckon this one here looks my favorite. In here, price rejects all these moving averages on there. Again, moving averages still got some few distance apart. Next candle very bearish, and even if you get in over here, it goes down all the way 90 pips. Even if you've had a stop of 10 11 pips inside there, you've got a 9 to 1. Not to say you probably will get out at the end, you probably get out here somewhere, but even if you got in at this bar, this has got two bars. And look at this engulfing candle over here, perfect, boom. You got one, you at least got, would you have got in there? Maybe. Again, this is where confluence factors and all this stuff comes in. Again, this is purely raw based on price action and some moving averages, nothing else. If you took every signal here, you would have made money. You would have lost money here. You probably would have got stopped out here, maybe break even here. But these three here, you're on to winners at these three. And again, depends on where your stop is actually on there. On there. So there's an example there of where it works pretty well. There are obviously going to be times where it doesn't work. Good thing is over here, shows a couple of signals here. I probably wouldn't take stuff like this. I probably want to see something of where it does kind of go in one direction, pulls back, creates a signal, and then back down again. This is, if you look at here, this is in a range here, so this is a bit too choppy. Again, another down signal. You probably could have taken that because you got your one move down, signal back down again, probably. Here's another good example here. And this is another perfect example there where you've got a buy signal. So again, this is a very strong trend. This is what I like about this. Look how big the gap is between the moving averages. And then you got your two signals here. Again, it also does depend where you're putting your stop, but you'll get 20 odd points there, a 1-to-1 there. This is a perfect one, a nice little thrust upwards there. Then you got this scenario here. One thing I would bear in mind is when you do this is look how many waves it's had. And again, I'm not a fan of Elliott theory and all this stuff, but that's something also to kind of bear in mind at the moment. We're currently in a scenario here where you're being a good trade at the moment, where it's giving you two pin bar signals here, and it's retraced again, gone against you a little bit, depending on how bullish you had in terms of your stop. But then it has gone back down, and it looks like it will continue down further at the moment. So some good examples. And again, I will stress enough that I've got the loosest settings on just to show you as many signals as I can here. You can play around with this, and and guys who've been using the indicator now for over a year and stuff will have their favorite settings. This is just an enhancement onto that. Just to show you a different chart, I tried to get some that actually has a lot of trends inside here, so you can see here. Imagine if you took this signal up here. Imagine if you took that signal up there. That's what I call disgusting. Very, very small stop. And it's all the way gone down here. You got some more signals over here. This for me I wouldn't take, because you don't really got any more pullbacks inside here. I really want to see stuff where prices come down, pulled back, creates a signal, and back down again. So these ones I probably wouldn't have taken. Again, this engulfing one, you know, it's one of those where you see it, you know, the slope's quite good, probably would have. Again, this one, slight little pullback, gone in. This one, probably could have would have taken that. This is a nice one. This just looks really nice. A nice pin bar. Price hasn't been there for 28 bars, and you know, another thrust downwards over here. Another thrust downwards. I reckon if you put some, let's put one on there just to have a look. I think if you put like the RSI or momentum indicator inside here, I reckon you'll have some divergence on there. Yeah, and you've got it right here. So you've got all of this going down, and then you've got divergence here where it makes a lower low, but the oscillator is making a lower high. So you know, anything after here, you're probably thinking that this trend is gone, and you know, you start looking at buy signals. Again, one signal here, nice signal there. Another up bar here. You know, this probably is not really showing anything there. You might have probably would have taken that one. You probably would have got stopped out. And then you've got, you know, going now into sells. You've got a sell signal there that did go down, but again came back against you. Even here, where look how far price is up, but still all the moving averages are in line. But you know, they're starting to squeeze together here. So again, you probably don't want to be taking that far into it over there. We've got another nice one over here, and some other ones inside here. And you know, like I said, you know, you've got some other good ones inside here. This one would have been a nice beauty for you to go down. And again, you've got another one over here, you know, potentially then going back down here. So you've got, you know, different examples here where you can use